The next adjustment we're going to be learning under PGBP is section 35 of PGBP, which is all about scientific research. The first adjustment which we just finished learning was section 32, depreciation, and now our second adjustment is scientific research, section 35. Now, this is very important from the examination perspective. It can either be a part of your full-fledged questions, or you can also get a separate 3 marks or a 4 marks question just testing you on this adjustment alone possible. Okay, because it is this important, we will go very, very deep in understanding all the intricacies involved around this section. We'll go part by part, we'll go a little slowly, but okay, listen. The very first discussion. This scientific research, what exactly do you mean by this? This is nothing but
R&D.
yeah, correct, perfect. This is nothing but what in general day-to-day language we call as R&D. That is the scientific research. Now, there are two ways in which my assessee can spend on scientific research. Either my assessee can have an in-house scientific research expenditure, or my assessee can make a contribution to an outsider. When I say in-house scientific research, what I mean is that within the organization itself, assessee may have an R&D department. You're understanding, within the organization itself, we may have an R&D department. That organization is spending money on R&D. That organization is spending, that unit is spending money on scientific research. In contribution to outsiders, I am going to an outside entity. For example, I'm going to IIM, or I'm going to some IIT, or I'm going to some laboratory. I'm giving them money and I'm saying use this money for research and development. That is contribution to outsiders. Both the methods are allowed. Scientific research expenditure may be in-house scientific research expenditure, or scientific research expenditure may be in the form of a contribution to outsiders. Now, our first focus will be entirely on in-house scientific research expense. Are you ready? Shall we go in depth and try and understand this? Yes, listen, our very first discussion is going to be on in-house scientific research expenditure. Now, when I talk about in-house scientific research expenditure, like how I just told you, here the assessee within the organization has an R&D department. Within the organization itself, the entity is doing some research activity. Now, for this research activity, what kind of expenses does the assessee incur? Either the assessee may incur revenue expenditure, or the assessee may incur capital expenditure, guys. Either it can be revenue expenditure on in-house scientific research, or it can be capital expense on scientific research. Now, if it is revenue expenditure on in-house scientific research, you will see, was it incurred before the commencement of my assessee's business, or you will check, was it incurred after commencement of the assessee's business. If it is in-house scientific research expense, whether it is revenue expense, whether it is capital expense, this scientific research should be connected to assessee's business. It should be related to the assessee's business. For example, if the assessee is in the business of paper manufacturing, the scientific research cannot be research relating to COVID-19. You're understanding, the scientific research and the assessee's business should have a connection with each other. This is a special point applicable only to in-house scientific research. You know why I'm stressing on this so much? Because when you make a contribution to outsider, whether it is related to assessee's business, whether it is not related to assessee's business, doesn't even matter. When is it important that your scientific research should be for the purpose of assessee's business? When is it relevant that your scientific research should be connected to assessee's business? Only if it is in-house scientific research. Now, if it is in-house scientific research, it may be RevX or it may be CapEx. If it is RevX, it may be incurred before the commencement of business, or it may be incurred after the commencement of business. If it is incurred after the commencement of business, you don't even have to see what kind of expense is it. Is it raw material? Is it salary? Is it overheads? Is it rent? You don't even have to bother. It will simply be allowed as a deduction fully. When I say allowed, what I mean is you are allowed to treat it like a business expense. You're allowed to reduce it from your taxable incomes, just like any other business expense of the assessee. If it is incurred after the commencement of business, it is allowed. What is the only condition, guys? It should relate to the assessee's business, that's all. But in case it is incurred before the commencement of business, now here I will put two conditions. Condition number one, this expense should be incurred when? When I say before commencement, 20 years ago I incurred. Even that will you allow? No. If it was incurred before the commencement of business, you will allow only those expenses which were incurred in last 3 years before commencement. When did you commence business? 3 years before that, only that period you will allow. And here, every expense you will not cover. You will cover only two expenses, raw material expense and salary expense. Only these two will be covered. Now, this salary expense, if you see, when the assessee is paying salary to employees, the salary may be paid in money or the salary may be in the form of perquisites, guys. You agree with me? I'll repeat again, when the assessee is giving salary to employees, this salary may be in monetary form or the salary may be in the form of perquisites. You will have to exclude the perquisites and just take the monetary form of salary. Okay, so if the revenue expense was incurred before commencement of business, you will have to fulfill two conditions. Condition number one, it should be incurred in the last 3 years before commencement. And condition number two, the expense should be raw material relating to scientific research and salary relating to scientific research other than perquisites. No other expenditure will be allowed. If both the conditions are fulfilled, then it will be allowed. But it will be allowed when? It will be allowed in the previous year of commencement of business. It was incurred before commencement of business, right? So once you commence the business, in that year, it will be allowed. Revision time. Section 35 talks about scientific research. When I say scientific research, this may be in the form of in-house scientific research. That is, I have a department within my organization doing scientific research, or it may be a contribution to outsider. If it is in-house scientific research expense, it should relate to my assessee's business. If it is contribution to outsiders, it may relate to assessee's business, may not relate to assessee's business. Okay, if it is in-house scientific research expense, it may be RevEx, it may be CapEx. If it is revenue expense, you will see whether it was incurred before the commencement of business or whether it was incurred after commencement of business. After commencement will be allowed. Whichever year you incurred, that year you will allow. If it is before commencement, you will see only last 3 years before commencement and only raw material and salary, that too excluding perquisites. This will be allowed in the previous year of commencement of business. On the other hand, it may be capital expense. In that case, how do you handle? If it is capital expense, here again, what will you check, guys? Here again, you will check whether it was incurred before commencement of business, or you will check whether it was incurred after the commencement of business. It may either be incurred before commencement or it may be incurred after commencement. Even over here, it should relate to assessee's business. If it is incurred after commencement of business, nothing more to check. It will be allowed. Simple story. But if it was incurred before commencement of business, even here, what will I say, guys? Even here, one condition will I put. Only the first condition I will put, which is I will allow only last 3 years before commencement of business. If it was incurred in the last 3 years before the commencement of business, then I will allow it when? I will allow it allowed in previous year of commencement of business. Till here, did you understand? If it is capital expense, It may be incurred before commencement or after commencement. If it is after commencement, it will straight away be allowed. I don't even have to check anything else. But if it was incurred before commencement of business, then condition number one, only one condition, I will consider only those capital expenses which were incurred in the last 3 years before commencement of business. This will be allowed when? It will be allowed in the previous year of commencement. Now listen, there are some more concepts here that you need to understand. When I talk about capital expense, you tell me, is land also a capital expense? Yes, but this land will be not allowed under section 35. If you have incurred any capital expense on land relating to in-house scientific research, for example, let us say the entity was setting up a laboratory. To set up a laboratory, it needed a piece of land on which it would construct the building. So it bought the land. The expense is straight away connected to scientific research. It is capex, but on land, section 35 deduction will not be allowed. Then my next point. Let me give you another example. On that land, my assessee constructed building, laboratory building. Laboratory building becomes capital expense connected with scientific research expense, not land. So which means on that building you will claim section 35 deduction. Do you agree? Yes, right? Now on that same building, can you claim depreciation also? No. You have a choice. Either section 35 or depreciation. If you choose section 35, then forget about depreciation. Same asset, same building, you can't enjoy section 35 deduction also, depreciation also, double deduction not allowed. Third extremely important point. This concept of put to use that you learn in depreciation, please limit that concept just to depreciation. Do not extend the concept outside of depreciation. So in section 35, it is just enough if you acquired the asset. Whether after acquiring the asset, did you put it to use or not becomes irrelevant. Yes, I constructed laboratory building, but I did not even use the laboratory building. Irrelevant. What is relevant? You spending, you acquiring, that alone is relevant. Are we crystal clear? Are we able to absorb? Yes. Can we do a quick revision? Now listen, I'll give you a quick revision. First of all, we said scientific research may be in-house scientific research or it may be a contribution to outsider. If it is in-house scientific research, it should relate to my assessee's business. Contribution to outsiders may relate, may not relate, doesn't matter. Then we said in-house scientific research expenditure may be revenue expenditure or it may be even capital expenditure. If it is revenue expenditure, it may be incurred before commencement or after commencement. If it is incurred after commencement, allowed, nothing more to check. If it is before commencement, only last 3 years before commencement we will allow, and we will allow only raw material and salary, that too excluding perquisites. We will allow when in the year of commencement. Then we learned about capital expenditure. CapEx may be before commencement, maybe after commencement. If it is before commencement, it must be in the last 3 years before commencement of business, not earlier than that. If it is in the last 3 years before commencement, that in the year of commencement we will allow. But special points, we said, if it is capital expenditure, we will not cover land. Land will never be eligible for section 35. Then we said, if you're claiming section 35 reduction for an asset, same asset you cannot claim depreciation also. I purchased some plant and machinery for my scientific research activity. On that plant and machinery, if I'm enjoying section 35 reduction, same plant and machinery, I cannot enjoy depreciation also. Any one only I can choose. And thirdly, lastly, we learned if it is capital expense, you purchased a plant and machinery, that itself is enough. You will get section 35 reduction. After purchasing, when did you put it to use? That becomes irrelevant. After purchasing the asset, when did you put it to use? That is irrelevant. Are we crystal clear with this discussion, guys? Can I take you forward to the next part of our scientific research discussion? Yes, now listen. Do you remember we had discussed about unabsorbed depreciation? Same concept I have even under scientific research. See, because of revenue expense, because of this, I can have a loss. Doesn't matter. But because of capital expense on scientific research, I cannot have a loss. For example, let us say my net profit is 100, okay, and my revenue expense on scientific research is 120. So what is my net number? I have a loss of 20, business loss. This is allowed. But on the other hand, if my net profit is 100 and my capex on scientific research happens to be 120, can I have a loss because of capex? No. This is not allowed. If a situation like this exists, you will restrict it to 0. You will restrict the capex to 100. So how much capex are you still left with? 20. What will you call this 20? Unabsorbed capex on scientific research. You will be able to understand this if you understood unabsorbed depreciation properly. If my assessee is having any capex on scientific research, my assessee can adjust it against net profit. He can subtract. But if my assessee's net profit is not adequate to absorb the entire capex, then the balance capex becomes unabsorbed capex. Because of capex, we cannot have a loss. Any unabsorbed capex, I will treat as if it is unabsorbed depreciation. You tell me what are the rules regarding unabsorbed depreciation? Can I set this off against any head of income?
Except salary.
It can be set off against any head of income. It can be set off against any income except salaries. Can I carry it forward subsequent years?
Yes,
How many years can I carry it forward for? I can carry it forward indefinitely without any limit. I can keep on carrying it forward. Later, whichever year I have any income other than salaries, against that I can adjust. Is this also understood? Yes, so in case my assessee is incurring an expense on scientific research, you see whether it is in-house, whether it is contribution to outsiders. If it is in-house, you see whether it is RevEx, whether it is CapEx. Because of RevEx, you can have a loss, but because of CapEx, you cannot have a loss. There is no concept of unabsorbed RevEx on scientific research, but there is a concept of unabsorbed CapEx on scientific research. Second concept is still clear. Now listen. Listen to my third concept. Third concept is very, very important. I will step into the third concept only if you are all thorough with my first two concepts. Feeling confident, guys? Able to grasp? Able to absorb?
Yes, ma'am.
Yes, right? Now listen. The third concept, pay a little extra attention. There are some concepts, right, which you listen to a little extra carefully. This is one such concept. Listen to me. My assessee purchased a plant and machinery for the purpose of scientific research. This is nothing but capex on scientific research. Section 35 deduction claimed. Now that section 35 reduction is claimed, it is not necessary that the assessee must keep this plant and machinery forever. After a point, the scientific research work got over, so this plant and machinery was sold. Possible. When you later sell the plant and machinery, what will be the tax implications? That is what I'm going to discuss with you now. Your understanding, listen carefully. I incurred money, I incurred capital expenditure on scientific research. I claimed section 35 reduction. Later, when I sell that same asset, what happens? Whenever you sell an asset on which you have claimed section 35 reduction, you always have to check something. You will check whether it was sold directly or whether it was sold after putting to some other use. What will we check? Whether it was sold directly or whether it was sold after putting to some other use. When I sell directly, it means I purchase the asset, It was a capital expenditure on scientific research. I claimed Section 35 deduction. I used the asset for scientific research. Work got over. I sold. What do you mean by after putting it to other use? I purchased the capital asset for scientific research purpose. Obviously, it is capital expense on scientific research. I claimed Section 35 deduction. After I claimed Section 35 deduction, for some time I used it for scientific research activity. Scientific research activity, after a certain point, I took the asset from the scientific research activity and I put the asset for some other use. After that some other use also got over, I now sold the plant and machinery. Are you able to identify the difference between both the scenarios, guys? Yes. Now listen. If it was sold directly, what will you do? If it was sold directly without putting it to any other use, it was just used for scientific research and then sold. Very, very simple. In that case, you will compare two things. Number one, you will see what is the selling price. At what price are we selling? Number two, you will see long back when you purchased, you claimed Section 35 deduction. How much Section 35 deduction had you claimed already? Out of these two numbers, you will pick whichever is lesser. This whichever is lesser number, this will be taxed as business income. Understood? If it was sold directly, if it was sold without putting it into any other use, you will simply compare two things. You will see what is the selling price number and you will see what is Section 35 deduction which you had claimed long back. Out of these two numbers, you will pick whichever is lesser, that will be taxed as business income. Story over. Now listen. What if you start putting it to some other use? Then what will the tax implications be? In this case, there will be two tax implications, guys. Number one, you take the asset out of scientific research activity and you're putting it into some other activity. At this stage itself, there will be a tax implication. I'll repeat again. I'm taking my asset out of the scientific research activity and I'm putting the asset into some other use. At this stage itself, there will be a tax implication. At this stage, what will be the tax implication? Very simple. When I start putting it to some other use, it will enter the block. Now you tell me, how does an asset enter the block? In what step does the asset enter the block?
Actual cost of
Very good. Step 2, add actual cost of assets acquired. In that step, the asset will enter the block, but good news, it will enter the block at zero value. Why will it enter at zero value? Because you have already claimed full deduction. Now, if I let it enter the block at a certain value, on that also you will claim depreciation. Double benefit. No, it will enter the block at zero value. Now it has entered the block. See, when does it enter the block? It enters the block when you start putting it to some other use. Now it is a part of the block. Later, when you sell the asset, any asset from the block, when you sell, what do? Any asset which is a part of a block, later when you sell, what do? Money is payable for assets sold, guys. Yes. Later when I sell the asset, any asset, guys, it is a part of the block. Later when I sell the asset, what do I do with the sale price? I put it under money is payable for assets sold. No, that's all. That same thing I will do here also. I will treat it just like any other asset. Once it enters the block at zero value, I will treat it as if it is any other normal depreciable asset. Any other depreciable asset, later when you sell, what do? You subtract it under monies payable for assets sold. Same thing you will do even over here. Story over. Understood? I purchased an asset. It was a capital expenditure on scientific research. I claimed Section 35 deduction. After claiming Section 35 deduction, later, after a certain point, I sold it. When you sell it, you will check, did I sell it directly without putting it into any other use, or did I sell it after putting it to some other use? If I sold it directly without putting to any other use, I'll compare the selling price with section 35 deduction, which I have claimed already. Out of these two, whichever is less I will pick, and I will tax as business income, story over. However, on the other hand, if I put it to any other use, then I will let it enter the block at zero value. Money is payable for assets sold. Later, whenever I sell the asset, whatever is the selling price, I will reduce from the block under money is payable for assets sold. Listen, we're done learning about in-house scientific research. Now, what are we going to learn about? Now we are going to be learning about contribution to outsiders. If my assessee is making a contribution to outsiders, for example, if my assessee is contributing to an approved university, or my assessee is contributing to an approved college, or my assessee is contributing to an approved research institution, or my assessee is contributing to a national laboratory, or my assessee is contributing to IIT or IIM. Assessee may make a contribution to any of them relating to scientific research. This contribution to outsider may be related to assessee's business, may not be related to assessee's business. It doesn't matter. It is not relevant. Whether this contribution has any connection with my assessee's business or not, it is irrelevant. So if my assessee makes any contribution to an approved university or college, to an approved research institution, to the national laboratory, IIT or IIM, then whatever the assessee is contributing towards scientific research to these entities, entire amount assessee will get deduction under section 35. You know, earlier, like 2-3 years back, we used to get extra deduction, which means, to encourage people, to encourage assessees to do this contribution. The Income Tax Act earlier said, if you contribute 100 rupees, you will get 150 rupees deduction. You used to get extra deduction even more than how much you spent. This was called weighted deduction. But we don't have all that anymore. How much ever you're contributing, that much deduction you will get under section 35. Then in my next point, my assessee may make a contribution to an approved institution. My assessee may make a contribution to an approved university or to an approved college. Or my assessee may make a contribution to any approved undertaking relating to research on social science. Even here, assessee will get deduction under section 35. And lastly, guys, social science, and it can also be statistical science. So we are covering scientific research, we are covering research on social science, research on statistical science, and lastly, my assessee may make a contribution to an Indian scientific research company. It is an Indian company, means it should be registered under India's Companies Act. It is a scientific research company. You must be aware every company has MOA. In the MOA, what is the most important clause? Objects clause. In the objects clause, we write what are the businesses my assessee does. In that objects clause, it must be written that assessee is into scientific research business. Then my company becomes Indian Scientific Research Company. So what is Indian Scientific Research Company, guys? It's an Indian company. Object of the company is doing scientific research activities. Any contribution I make to such companies, even that will be allowed as a deduction under section 35. So, conclusion, when I make a contribution to outsiders, I may contribute to an approved university, college, research institution, national laboratory, IIT, IIM. They should be approved. They should not be unapproved. It may relate to scientific research. It may relate to social science research. It may relate to research in statistical science. On the other hand, if I make a contribution to Indian Scientific Research Company, even that will be allowed under section 35. Indian Scientific Research Company is a company which is an Indian company, first of all, and its object is doing scientific research activities. Got it? So with this, we are done learning all the provisions relating to scientific research.